What's going on YouTube? Bennett Tindle here, the founder of Godel Trades, and today is Wednesday, November 21st, 2018, the day before Thanksgiving. The markets will be closed tomorrow, Thursday the 22nd, and we will be open on Friday the 23rd for a half-day session. So let's go ahead and dive in and get right to it. We're going to discuss the Elliott Wave counts in a few particular stocks, as well as all four major market indexes. We're going to take a look at the Nasdaq 100, we're going to take a look at the S&P, the Dow Jones, and of course, small caps, the Russell 2000, because the Russell 2000 can often be a leading indicator as to general market conditions and market sentiment. So today we closed, if you take a look, at your watch list, you're going to show up 3.3, so 0.3% from yesterday's close, but we're down on this session. We're down on the day. We opened at 2657.74. We had a high of 2670.73, had a low of 2649.82, and we closed at 2649.93. So we closed right off those lows without a lower wick on the candle. We're pretty much down here in no man's land as far as support levels go, Fibonacci extensions and retracement levels. We're into this fourth wave triangle. We're actually now red on the year. The first trading day of the year was January 2nd, and we had a low there of 2682.36. So we're unable to get back into that territory successfully, at least as of yet, following the breakdown from the 19th. Back on October 29th, we put in a low, 2603.54. Now, the Nasdaq 100 is a bit of a different story. The Nasdaq 100 is into territory in the green. The last trading day of 2017 was December 29th, closing 63.96.42. We're now 65.76.66. We're just a stone's throw away from that. We're also really just a stone's throw away from these February 9th lows of 61.64.43. High was 7700.56. Now, I like to utilize the NDX, which is the Nasdaq 100. The QQQ is essentially an ETF of the Nasdaq 100. I don't like to look at the Nasdaq composite. The majority of the Nasdaq's activity and what traders are looking at and analyzing is the Nasdaq 100. So I feel that's where you should be focusing your attention. I also feel you should be focusing your attention on the cash session. So for instance, as opposed to taking a look at /ES here in Thinkorswim, which is the S&P mini futures contracts, this often has a tendency to kind of skew the overall pattern or development or sentiment. If you're counting Elliott Wave, I think it is imperative that you utilize the cash session, and just because the cash session, that's king. Cash is king. The cash session is king. That's what speaks. You know, unless you're dealing with major geopolitical events and things of that nature, or you know, when Trump was elected president and futures rallied 1,000 points in the Dow, it's really where you should be focusing your attention. So keep that in mind. The VIX down 7% on the day off those. Gosh, we had highs back on. Actually, the high was set here on the 11th, and then October 29th, we're unable to get back to those highs, but back on the 5th of February, we had a high of 50.30. Absolutely incredible. So we are seeing volatility back off just a bit. If we take a look at the internals on the day, relatively low, below average volume. Here's the 9 moving average for T-vol. And we put in a pretty low day as far as volume goes. We were actually trending under the 50% mark for most of the day, and this last little bit kind of came in the last 30 minutes where the markets sold off. So Trin was actually under 1 the majority of the day, which indicates there is more average buying volume versus average declining volumes. Declining volume when you're comparing stocks that are up versus down on the day. The tick index was also relatively quiet. We did put in a nice push there to over 1100. Neg 1000 was met here during, again, that last 30 minutes of the day. If we take a look at how futures closed up, you can see here right at right when that last hour set, we just started a push right to the lows, and really that's when the volume started to show up. We had some decent volume here in the morning, and it just continued to decline, trading well under the average for the majority of the day. And then we got these pretty decent candles here. Let's see, the S&P 500 /ES futures, 14,000 in that, 14,000 contracts in that 5-minute candle. We had 39,000 in this particular candle, so that can't be right. Let's see, 62,000, 39,000, 15,000. So a lot of selling pressure. I think some shorts are getting in for what I feel is another move down yet to come. Same story here with the Nasdaq futures and, of course, the Dow Jones futures. So it wasn't the greatest day. Wasn't expecting much today, being that we are going into a holiday break. Spot VIX did sell off. VIX futures, however, remained relatively consistent throughout the day, which was rather telling in and of itself. All right, let's get back to the technicals. We're going to start with some basic technicals, just looking at momentum divergence, things of that nature, typical 50 and 200 and 100 moving averages. So here's the SPX, the S&P 500 again. Huge momentum divergence following the correction that we experienced back in February of this year. We're going to get off the daily really quick, and we're going to get over to the 3-year weekly chart. In all of the S&P 500's history, I looked back to the late 1800s when this thing first started trading. There was not one instance that I could find, at least, perhaps I missed it, but there was not one instance when we broke the 50 moving average here on the weekly, so the 50-week moving average, and we didn't proceed to at least test the 100 moving average, if not dip just slightly below that weekly 100 moving average. That's pretty interesting to take into consideration. All right, in addition, bonds have broken a 30-year uptrend. We know that. Rates are on the rise. We're in a rising interest rate environment, so yields are going up, bonds are going down, because remember, bonds and yields are inversely correlated. That's taking a hit on U.S. equities, okay? Contrary to popular belief, U.S. equities and bonds, the bond market and the equity market, actually shows a relatively positive overall correlation. So you can take a poll of investors, and you'll probably get the majority who think there's a consistently inverse relationship between bonds and equities. All right, so we just got back. I don't mean to interrupt where I'm at, but we just got back from that 15-minute break in futures markets, and we're trying to push lower here. So, we've got one additional rate hike likely planned. The Federal Reserve is likely to hike rates for a 4th time in December. So at the December Fed meeting, I really think we're going to get at least a 25 basis point rate hike. There's actually talk of a 50 basis point rate hike, which I don't necessarily see that, but I do think we're going to have one more this year. Based on the dot plot, they're looking at 3 in 2019 and 1 in 2020 to complete the cycle. I think it's currently 12 of the 14 Fed members are anticipating the December rate hike. So we got to see. We really have to see what happens there. You know, President Donald Trump has kind of been criticizing the Feds, and Jerome Powell thinking that he's hiking rates too fast. Well, take a look at inflation. Take a look at unemployment. Inflation, we've overshot our target. Record unemployment we've seen recently. A lot of people think that, this insanely low levels of unemployment, the wage growth and increase, that this is all automatically bullish indicator for the stock markets. Well, history has proven that that is not the case. So there's a lot that's really pressuring the market right now. Okay, I don't feel that the trade negotiations between the U.S. and China, U.S. and other countries, has had that significant of an impact. Certainly it's kind of shaken investor sentiment, but I don't think that's the root cause of this volatility that we've seen. We're coming out of a very low volatility, several years of very low volatility, and volatility is clearly back. Volatility is fantastic for traders and not the greatest for investors. Okay, so a lot of you might be wondering, do I sell all my stocks and run for the hills? Do I, continue repositioning my portfolio? Well, that's a personal decision. I feel if you're looking to go shopping into some of these lows, that you need to leave room to average in. You don't want to put all your eggs in one basket. You don't want to deploy your capital all at once. You want to be able to scale in. Dollar cost averaging is a fantastic form of investing that I feel is something that the younger generation should focus on. I wish when I was 15 or 16 that I started a retirement or investment account and consistently put capital into that. I mean, it's pretty ridiculous when you take a look at the compounding interest. If you would just simply start with a $5,000 portfolio, put in $250 a month for 40 years, and simply have your capital in a market fund and track the overall annualized returns of the S&P, for instance. It's pretty ridiculous. You don't have to be rich to retire rich, okay? You don't have to be wealthy to retire wealthy. So I think those of you out there who are new to trading or new to investing, as you trade, as you generate profits and capital, you need to find a way to siphon off some of your trading capital and put that into a longer term portfolio. That's just my 2 cents. And of course, whether or not you're going to liquidate into these lows all depends on your investment lifespan. So if you have a significant period ahead of you where you're anticipating to not need the capital, I mean, if you're 25 years old and you're looking to retire at 60 or 65, that's a whole different story than somebody who's 65 or 70 and might need the money they have in the near future. If you're sitting on a $1 million portfolio and you're 65 years old and we get hit with 50% market correction, which is completely not out of the question, then absolutely you're going to be, potentially hurting. Another sign that we're at or nearing the final inning, quote unquote, of the bull market is capital rotation. We're seeing significant capital rotation out of consumer discretionary, out of information technology. That's evident simply in the market caps of the FANGs and the market caps of the overall sectors. Consumer staples has actually been catching a bid as of recently. That's one defensive kind of style sector that a lot of capital has been making its way into as of recent. We had highs back on at the end of January of 58.95. We set the low here on 5.3 at 48.76. We're starting a nice move up. Okay, this looks like it could be a wave 1 up, wave 2 correction. Now we're doing another 1 2. So keep that in mind. Keep your eyes on the sectors. When you're evaluating sector performance, I feel it's imperative to not only look at the traditional spider sectors, which are unequally weighted, but look at the equal weighted sectors, and look at the sectors rather on an equal weighted basis, and determine, it helps you better determine overall performance of the sector. So for instance, consumer discretionary on the day on an equal weighted basis closed up 2.04%. On an unequal weighted basis, we closed up 1%. So we're actually seeing pretty broad relative strength within that sector. Taking a look at staples on an equal weighted basis, down 0.6%. Consumer staples on an unequally weighted basis. Sorry guys, I had my dog under my chair here going crazy. Down 0.8%. All right, so down 0.8% on an unequally weighted basis, and up 2%. Sorry guys, scratch everything I just said. Up 1% consumer discretionary on an unequally weighted basis, and up 2% on an equal weighted basis. So that's pretty broad relative strength. Staples were down 0.6% on an equal weighted basis, and staples were down 0.8% on an unequally weighted basis. And just to give you an idea of how skewed some of these spider sector ETFs are, let's take a look at the consumer discretionary breakdown. 21.38% of that is Amazon. 10% is Home Depot. 6.7% is McDonald's. 4.7% is Nike. You get the idea. Let's take a look at XLK. Apple, 19.72%. Microsoft, 17%. Visa, 5%. Okay, so it's important, like I said, that you really evaluate these sectors on an equal weighted basis. It helps you to better determine the overall strength of the particular sectors. Now, speaking of sectors, let's go ahead and dive into some here. Let's take a look at XLK. Let's see what was leading the day. ADSK, Autodesk, that was leading the move to the upside. Closed up on the day, down on the session. Activision, Wow, this thing is coming off some heavy lows. This thing was 84.68 down to 46.83. Now it's back to 50.85. ATVI, I got to take note of this one, and I'm going to come back to it and put a wave count together. I don't have a wave count currently for ATVI. Adobe, that's another stock that's actually looking pretty good out of this corrective move. We had the lows put in of 207.02 up on the session, up on the day and up on the session, up to 225, so 2.25 from 277. That's a pretty decent corrective move. Taking a look at Western Digital, it's coming off the lows a bit. WDC, I'm going to take note of WDC. Salesforce, CRM, that put in some crazy lows. I was looking for a move to 115, 114, somewhere in that region. And we're starting to move up out of that. Perhaps we'll look at that wave count. I do have one put together there. So you get the idea. Out of the XLK, stocks leading the downside, of course, NVIDIA, NetApp, AMD trading in sympathy with NVIDIA. Really no news behind AMD or reason for it moving down other than semis just kind of taking a hit. All right, so let's see here. Healthcare. Healthcare is another sector that's been quietly performing quite well. Give me just one second here, guys. Healthcare. There's some really good looking charts here. Stocks moving to the downside. Johnson & Johnson, not surprised. I was looking for a corrective move out of Johnson & Johnson, although that closed pretty sharply down on the day. We'll review that here together in just a minute. Consumer staples. Some decent moves here. And to the downside, Philip Morris, General Mills, Cisco, not the tech Cisco, Procter & Gamble. That's another stock I've been looking at as of recently. All right, now let's go over to consumer discretionary. See how that did. F&L, Foot Locker. That had decent earnings apparently. We'll have to dive into that report. It's up pretty significantly from yesterday's lows. It's another stock that might be worth taking a look at. HBI, L Brands. L Brands been very much so under pressure, down to 25.89 from 63.10. I had a chart up for L Brands that I was working on a few days ago. We'll have to Win. We'll have to look at that. Win was a $203 stock earlier in the year. It's down just over the 100 handle. This is something else I'm gonna take a look at. But anyways, guys, you get the idea. Take a look at the sectors. Take a look at what's moving on the day, why it's moving. Let's take a look at the overall the overall S&P. Foot Locker leading the upside, Autodesk to the downside, Johnson & Johnson, Philip Morris, NVIDIA, American Electric, so forth and so on. So about 2/3 of the market in the S&P was up today. Let's take a look at Nasdaq 100. Autodesk, again, topping the leaderboard. NVIDIA to the downside. Tesla actually getting a move down. Not really surprising. We're actually moving into this fourth wave here. We'll look at that in just a minute. All right, guys, so we've gotten that out of the way. Now let's go ahead and dive into the technicals, talk about where we're at and where I think the markets are going to be heading over the next 9 to 12 months. Let's just take a look at the possibilities. So I'm tracking 2 Elliott Wave counts. Of course, I do have the count that shows, in fact, the top is in. This is the S&P out of the credit crisis lows of 2009. Wave 1 up of the cycle degree, ABC flat and cycle degree 2. That gives us this Elliott Wave trend channel, which for those of you who are unfamiliar, you want to be looking at this on a semi-log scale. and you essentially take a parallel line or a trend line from the top of 1 over to 3, project a parallel channel from 2 to 4, and that typically will give you your 5th wave highs. Inside of cycle degree 3, up in 1, down in 2, a nice 5-wave move of 3, down in 4. 4 and 2 square up quite nicely as far as retracement, as you can see here. This tells us these are corrections of the same degree. Often corrections of the same degree will tend towards equality. Then we move into 4. 4 also gave us equality of 2. Following that, out of the 2016 lows, we had a nice push up in 1, WXY combination in 2. Then we had 3, and of course inside of all of these there are smaller degree sequences. I'm just showing you the larger degree count for context here. Following the correction back in January and February, which could be decomposed a couple of different ways, we had a move up to complete 5 of the primary degree. 5 of the primary degree completes 5 of the cycle degree. 5 of the cycle degree completes 5 of the super cycle degree. And this will be the first time in all of the S&P's history that we've ever completed a 5-wave move of the super cycle degree, which will then complete wave 1 of the grand super cycle and then push us lower. Okay, so I am tracking this, and that now we're just in a new 5-wave decline, new corrective environment, bear market. I'm also tracking this alternate, which is still technically valid from a rules and guidelines standpoint. Okay, everything is the same leading up to the 2016. Following that, we had up in 1, down in 2. Intermediate 1, 2 here squares up to this intermediate 3, 4. Then we had intermediate 5 to complete primary 3, and we're now in primary wave 4, which squares up to this wave 2. That leaves room for one final push in primary degree wave 5 of cycle 5 of super cycle 5. Okay, so this is my current bullish count that I'm favoring. Okay, I don't feel that the markets have deteriorated quite to the levels that you would anticipate for this to be the top of the market. I don't think fundamentals have deteriorated quite to the levels that you would anticipate for this to be a market top. Is it possible? Absolutely. Could either one of these counts continue to trade out? Absolutely. The history is not going to determine our future. Our future is unwritten. Are we close to the end? We definitely are. Whether this is it with one final move, or in fact the 2940 high was the top, is yet to be determined, and we've got to wait to see what's going to happen. The good news is both call for lower and both call for further downside. So let's go ahead and get off the weekly. Let's get to the daily here on the bullish count. I'll show you how this is decomposed just really quickly to give you a couple ideas. Wave 4 here can be counted as a triangle. Up in 1, ABC flat in 2. There's a 5-wave move in 3, down in 4, and then a little 5-wave impulse in 5. You can also count it like this. Both are absolutely acceptable. ABC for 4, then we had a diagonal for 1, correction in 2, same 3, 4, and another impulse in 5. Either way gives you the same end result. We had a projection of 2930 for this high, and we got 2940. So our Elliott Wave projection leading up to this was about 11 points off before we expected a decline. So let's not talk about the top as in count, although I want to point this out relatively quickly. Elliott Wave time extensions can often be extremely accurate and very telling. Based on the cycle degrees movement, a 5 versus all Fibonacci time extension would give you, typically you're looking at 38.2% of the duration of waves 1 through 4 projected to 5. That would put us at October 8th as the 5th wave top. So that is kind of supportive of this being the top of the market. Getting back to our bullish interpretation, we're looking at this as 5 waves of A, 3 of B, and another 5 of C. Targets here would be equality of C and A, which comes in here at 24.92, spot 2-1, and also a 38.2% overall retracement of the wave 3 advance. So typically, Your wave 2 corrects between 50 to 78.6% of the wave 1 advance. Generally, you look for a 61.8%. A wave 4 is generally equality of 2, or it's a 38.2% retracement of this advance from the bottom of 2 to the top of 3. So that would come into play at 2534.10. So here's our Fibonacci support zone. You can come over here on mode of wave, grab support zone, and drop this into the appropriate levels. So there's our fib support zone, and this remains my near-term target. Based on the duration of 2, we can compare a 4v2 time comparison, and you're typically looking at equality to a 161.8% relationship. So corrections of the same degree often tend towards equality in both time and magnitude. Also, if we were to take a C versus A time extension, equality of that would be December 15th. So that lines up well with the higher degree fourth wave that this C wave is a part of for this correction. For those of you who are unaware, 2 of the Elliott Wave corrections are labeled as ABCs. An ABC of a zigzag pattern is 5 down of A, 3 up of B, 5 down of C. B generally retraces between 50 to 61.8% of the A wave decline. And then the other ABC labeled correction is a flat. And in a flat, you have 3 down of A, 3 up of B, and then 5 down of C. So a 5-3-5 is a zigzag, and a 3-3-5 is a flat. So here's our primary wave count interpretation, looking for a move down to these 2534.10 levels. This also lines up to the bottom of the Elliott Wave trend channel, so that should offer support as well as this Fibonacci support zone. Getting off the daily, getting down to the 195 minute, you can take a little bit better look at this. Getting all the way down to the 1 hour, now we can really kind of dive into the substructure of this count. So this 5 waves of A ended with a diagonal in 5 of A. We had, if we get down to a 30 minute, we had a 5 wave move of A here. You can either put A here and just straight down in B, which then projects to C, but I'm counting this as a flat of B, so 5 up of A, ABC flat in B, then up in C. The B wave gave us the 61.8% expected retracement for a B wave. That offered resistance for the start of the move down. Down in 1, up in 2, down in 3, up in 4. Typically I would have put 4 here and called this a 4th wave flat, but then you would not have a properly decomposed 5th wave. So this 5th wave decomposes as a diagonal. And typically I like to notate diagonals by putting the channel on there, because in an impulsive 5 wave move, you do not want 4v2 overlap, where in a diagonal it's a requirement. Another way you could properly label this, although I don't see it quite as much, is if we did go ahead and put 4 here, we put 5 here, and we called 2 a flat, up in A, down in B, and then up in C. I'm sure there's people out there who are labeling it as such, but I'm not going to label it that way. As far as equality, 4v2 equality came into play, and the 38.2% retracement. So we got just over that. Inside of this minor degree wave 2, let's get all the way down to a 20-minute chart. This is not a typical zigzag or a flat. This is a what was referred to as a 3-3-3, and that's labeled as a combination, a WXY. So you have ABC of W, ABC of X, and ABC of Y to complete the overall wave 2 correction. Talking about wave 2's retracing between 50 to 78 or 61.8% of the wave 1 advance, or in this case decline. We got right to the 50%, had this completed 3-3-3 corrective structure, and now we're pushing lower. Into this move, you had down in 1, up in 2, you have 5 waves of 3, because if we get down to a 10-minute chart, you can actually decompose this as a nice 5-wave move of its own. Down in 1, up in 2, down in 3, up in 4, short little 5 to complete 3. Then you have this 4th wave here. This 4th wave squares up with this wave 2 extremely well. 2700 spot 51 would have been a quality, and the high was 2701 spot 96. Then we had another 5-wave move to take us into the November 20th lows, 1, 2, 3, 4, and 5. Now we're doing a correction of wave 2 of the minute degree. Okay, so this 5-wave sequence here is part of the minor degree wave 3, just as this 5-wave sequence is part of this wave 1 of the minor degree. Inside of this, we have a 5-wave move, and it's fractal in nature. Okay, that's how Elliott Wave works. So I'm looking at this as actually another either way, it's a 3-wave corrective structure, whether it's a WXY or an ABC. This looks like 3. This looks like a nice little 3-wave. This actually kind of looks like a 5-wave move, but we're all the way down on a 10-minute. So let's just get to a 20-minute. And then 3 up of C, or in fact, you could even make this a little 5-wave move. But it doesn't matter. The overall Fibonacci levels are what we're looking for, and the larger degree context is also what we're after here. So getting back to the 20-minute, up in A, down in B for a nice flat. In a flat, a running flat, your B wave can set a new high or a new low, depending on if you're in an uptrend or a downtrend, so in advancing your corrective environment. And then C is typically equal to A. So if you were to measure the distance of A, project it from the bottom of B, that would typically give you your target for C. Equality of C and A came in at 26.68, spot 44, and that's where resistance was put up on the day. We pushed over it just briefly, but we pushed right back down under it and started to sell off towards the end of the day. Okay, so I see this as the start to what's going to be a third of a higher degree third, and that's typically your most aggressive decline in an advancing or declining pattern. Okay, in the impulsive 5-wave structure, your wave 3 is typically the most aggressive. So the minor degree wave 3 should take us to that 2522 spot 42, and I'm looking for a move out to November 29th. So we're gonna get to this potentially by next Thursday. Today's Wednesday the 21st. We're looking for this possibly next Thursday the 29th. That's kind of our near-term target. So that's the S&P. There is an alternate count, although I don't necessarily care for it. The alternate count works better for the Nasdaq, and that is everything is the same leading up to primary degree wave 3 completion, but we're just counting this slightly different. And if we get down to the 1 hour, we're looking at this as an ABC flat. And the reason I put this count together was simply to have context in the event the markets caught a bid and started a rally. So in this, we'd count this 5 waves of A, 3 of B, another 5 of C to complete A. Then we did 5 of A, 3 of B, then we're going to have a rally up in C. Based on the way the market moved today towards the close, I don't really see it. This 78.6% B versus A, so that's a key level. Let's just grab, out of curiosity, a Fibonacci retracement, drop this in. So it's possible. It is possible. I don't see it as a likely probability, but it's possible that we just started a little 1-2 of one of this 5-wave move that would be inside of C. And in fact, that's just what it tried to do there for me. Degree, decrease, impulse, So we have something along those lines. Okay, so this is kind of a backup count. I still favor this count here, which simply shows us as a nice ABC zigzag for wave 4. There is a rule of alternation in that corrections of the same degree often exhibit different corrective patterns, and that would line up in that this is a combination, this is a WXY, and this would be then a zigzag. So this would line up. All right, so that's my outlook on the S&P. That's where I stand. Really looking for that move down to the 2,500 level. I really think that the bulls want to see this test of the 2532 69 lows from February 9th, and that also kind of lines up with that fib support zone, and that's really where I'm targeting my trades. This week I put on a few trades with my subscribers. We had S&P short. I took it for 86%. I had a pretty massive position on there. A lot of our subscribers held to 500% profit on that one. I completely anticipated further downside the day we traded this. This was back on the 19th. So this was on Monday, the decline we had on Monday. And I even let my subscribers know, like, look guys, we know the wave count is showing further downside on the day. We're expecting further movement to the downside, but given what was actually kind of an oversized position for me, I opted to just take my profits in that. We also put on a trade in the consumer staples sector. We had an overnight call position for Pepsi, closed that out for 179% profit. Had a relatively small exit window as that started to sell off into a wave 2 correction of sorts, but it was still a pretty solid trade. And then also had a little 37% scalp on SPY. Traditionally, I like to trade between 1 to 3 swing positions per week with my subscribers, and that's all based on Elliott Wave interpretation. 100% Elliott Wave based option trading. And Elliott Wave gives you a fantastic way to determine whether or not your trade is valid or not. Okay, give me just 1 second, guys. I'm going to take about a 30-second break, and then we're going to get into it with individual equity charts. Actually, before we move on, let's take a quick look at the Nasdaq 100 and the wave count that I've got going here. So this one's being counted slightly different than the S&P, and we have 5 primary degree waves of 1, ABC flattened 2. Then we had a nice 1, 2, 3, 4, and 5 to make up cycle degree wave 3. Speaking of Fibonacci time extensions, based on the duration of 1 projected from the bottom of 2, 161.8% 3 versus 1 time extension relationship would have put us at completion on July 9th. We completed this on July 20th before we entered this 4th wave correction. Okay, this 4th wave correction, I am counting it as another flat. On my top is in count, this is being counted as a triangle. Both are acceptable, but what happens here is going to determine really what happens in the future. So that's a tough call. That's a tough call. If this is a 4th wave flat, the time extension lines up. We're about a 200% 4v2 time extension. We're at equality of 4 and 2. So that lines up really well. And then what would happen here, what would allow this to have further upside potential, is following the lows back in February of 2016, up in 1, WXY combination of 2, up in 1, another WXY combination of 2, nice 5-wave advance of 3, triangle in 4, up in 5. This closes intermediate 5, which closes primary 3, and now we're pushing into primary 4. Given that wave 2 here was of the intermediate degree, of a combination, this could be a zigzag without a problem. So getting back to the daily and taking a look at how this is decomposing up to the completion of primary degree wave 3. Wave 3 of the intermediate degree completed, giving us a triangle for 4. Nice 5-wave advance here with an ending diagonal in 5. See analysis to show channel just so you guys can see that. 1, 2, 3, 4, and 5. This decomposes a bit strange, but it did give us the requirements for it to be a completed third wave. Okay. Now we're looking at another ABC for wave 4. Getting down to the 195. This move off the highs is a bit more tricky to count, and we're pushing it just a bit to get this to qualify and count as an impulsive 5-wave movement, which brings in the alternate here, which supports the flat. Okay, so the alternate that we just looked at for the S&P works actually better for the Nasdaq 100, but given the way the Nasdaq 100 has been acting, I'm still leaning towards this being a nice 5-wave decline of A, 3 of B, and now we're doing another 5 waves of C. Okay, support again, quality of C and A, 61.52, 38.2% for the 3 relationship retracement, 60.97.47. Getting down to the 1 hour. Same thing going on here, down in 1, up in 2, and now we're doing another 1, 2, and we're getting ready for that third of a third. Sorry guys, here we go. So even with the top as in count, it's still the same thing. This would be 5 waves of 1, this would be 3 of 2, now we're doing 5 waves of 3. That is, in fact, if the market top is in. So that's the Nasdaq 100. Very similar. Wave 3 here should take us out towards November 30th, down to 61.35. Based on internals here, it would look something along those lines. All right, so that's the Nasdaq 100. That's the S&P. We took a look at Dow Jones. Very similar here. So 3 ABC 4 1 2 1 2 3 4 and 5 to complete primary 3. Now we're doing this ABC zigzag for 4. Key support levels: 22,633 of the 38.2% retracement of the third wave advance, and then equality of CNA actually comes in up a bit higher since we got a nice 78.6% relationship or retracement in B, which gives us equality of CNA a bit higher than if we would have only had a 50 or a 61.8% retracement. All right, guys. So same thing here. 5 waves down of A, 3 of B, 5 of 1, up in 2. Now we're starting on a nice 5-wave move inside of 3. I want to show you something really quickly. So this turned into a 4th wave triangle, and the reason why I have it labeled as a triangle is because if we were to just simply call this an ABC, put 4 here, this wouldn't give us a proper ending diagonal. 3 would end up being the shortest wave, okay? So I simply made this a triangle. We did have a slight throwover in D, I believe. See a low of 25,236. Actually, we didn't. We were 10 cents off. Okay, so this qualifies perfectly as a triangle. So that's about it, guys. Those are the bullish counts. Of course, still tracking the whole idea that the top is in, and it's time to, you know, sell our stocks and run for the hills, but just don't see it. Just don't see it quite as of yet. One thing that's rather interesting, New York Stock Exchange. It never got back to those highs that we had put up in January. Okay, we got to the 61.8% retracement level, and we started backing off pretty heavily. The final high was right at the 78.6, so that's kind of indicative of this being a counter trend wave 2, setting up for a wave 3 decline. I did work up a potential bullish count, which would call this a really long expanded zigzag. That doesn't work either. Yeah, it works. It would work. Because you can count this as 5 of A, WXY of B. I mean, that's just, time-wise, B versus A, that's just pretty ridiculous. So the Nasdaq, the New York Stock Exchange is kind of telling us a different story, in that the top absolutely might be in, but I'm not there yet. I'm not seeing it yet. Just not seeing it yet. So we gotta wait and see. See what the future holds, see where the future takes us, and go from there. Be ready to adapt, stay nimble, keep capital available to deploy as new lows are set if you're investing, and we'll go from there. All right, we're going to dive into individual charts. 1 minute here. All right, starting out with Amazon. This stock has the most influence on the consumer discretionary sector at 19, nearly 20% of the traditional unequally weighted sector ETF. So this dates back to the IPO in 97. That would have been a great buy. Dollar. Of course, it's been through some splits. Up in 1 of the super cycle degree, down in 2. Wave 2 gave us a beautiful 61.8% retracement. Love to see those Fibonacci levels coming into play. 1-2 of the cycle degree. 1-2 of the primary degree. Whoops. Giving us just past a 61.8, right to a 78.6, which is another very common retracement target for a wave 2. Okay, then we went into this primary degree wave 3. Here's a nice 5-wave move of the intermediate degree. 4 squares up nicely to 2. I don't necessarily care for the pattern. This was a flat. This looks like it was a zigzag if we get down to a smaller time frame. So this is the only way to keep this bullish. And even so, this 4th looks to be squaring up to this primary wave 2. That comes in at 703.45. $700. A 38.2% retracement is $431. I don't see that happening. If we get to the daily, start looking at this a bit more. Your previous 4th wave of 1 lesser degree, which is often a support level, is down at 400. Wow, 476. Because we're completing the primary, so 1 lesser degree would be the intermediate, and that's the intermediate 4th there. So I think Amazon, from a technical standpoint, is in a world of hurt. This is not a good-looking chart. Not a good-looking chart. I counted a 5-wave move here off of the highs, and I put together this 5-wave decline forecast. And I had only forecasted a wave 2 to a between a 61.8 and a 78.6, and the minute it broke the 61.8 at 1977, everybody said, "Oh, you're wrong. Your count's wrong. We're going higher." And I didn't see it. I couldn't come up with any bullish count that would continue us after this corrective move. Okay, this didn't even constitute as a completed corrective of any sort, corrective pattern of any sort, which means that we had lower to go. So it came really close to invalidation. Invalidation would have been the highs at 2050 spot 50. We put in a high of 2033.19. Okay, another way you could count this wave 2, because this doesn't look this looks kind of like a 5-wave move. This doesn't look like a corrective move. So another way to do this would be to put 1, 2, 3, 4, 5. Would be do something like this. And call that C. So that's another way that you could properly label it. But after that, we forecasted a 1618 relationship. We got a 200, so we were looking for 1744. We got, gosh, 1681 somewhere in there. And then after this completed 5-wave move, and I want to show you the fractal nature of Elliott Wave. 1, 2, 3, 4. This 4 squares up to this 2. Big 5-wave move, 5th wave move. Inside of 3, it breaks down into a nice 5-wave sequence. Of that 5-wave sequence, this 3rd wave breaks down into its own 5-wave move. Okay. Again, what we were just talking about of wave 3s being the most aggressive move. Here's a great example of that. Following that, I said, okay, we're going to be looking for resistance between 1840 and 1858, and that would have been equality of 4 and 2, and all the way up to equality of C and A. I said we're going to look for this 1840 to 1858 4th wave resistance before we push lower in 5. I actually had 5 only forecasted to 16.25, and we ended up at, gosh, 1474, somewhere in there. Just absolutely incredible move to the downside. This here actually looked complete right here. Decompose, ending diagonal. Okay. And it started to look like we might have been moving into an impulsive pattern. Then earnings came out, market spoke, sold us even lower in this 5th wave. Then we have 1, 2, 3, 4, 5 of A, 3 of B. You can count this as 5 waves of C. This gave us right between a 50 and 61.8% retracement of the wave 1 decline, and I'm looking at this as of the minor degree. Now we're trading into 3 of the minor degree. Inside of 3, of course, is a 5-wave minute degree sequence. This 3rd wave should take us between 1284 to 1048. And we've had a nice 5-wave move, and now we had a nice corrective move off the lows. In the chart update that I put out, let's see if I can find it. Forget exactly what our target was. Give me just a second here. Come on. Or not. Open with. Sorry, guys. I'm just very curious. All right. Amazon. So we were at 1512.50. This was Monday night when I put this chart out for subscribers. Just kind of talking about this 4th wave correction, squaring up with that wave 2. And corrective primary 4 in play, trading in minor degree 3 of 5 of the 5-wave sequence inside of intermediate degree wave C, which will complete wave 4. This wave 4 squares up to wave 2 from November 2008. Near-term targets include 1422 prior to any significant bounce. Okay, current count 5 waves of minute degree to make up wave 1 of minuet to make up the minute. And that was right here. Where were we? 1512. 1512. Where's 1512? Let's see, this was on the 195. So let's get up to the 195 just to see how this. So we were coming out of, let's see, 1, 2. We were looking for this move here, okay? So we were right here looking for that move down. And then the bounce. And then another move. And we got it. We ended up with 1420 lows. We were looking for 1422. Got to move all the way back to 1544. I'd call that a fairly significant bounce. So love to see that working out. This is just something we put out in addition to our newsletter every week that just includes some charts. We also post for our all services subscribers. We post charts throughout the market day. Nvidia was another one we were looking for further downside. Let's see. Netflix, we've been after Netflix for some time to get us down to 250s. Entering heavy fib support and expecting 250 area to hold. Equality of 4v2 comes in at 253.89. So that was kind of and that remains our primary target to the downside. So we'll look at Netflix next. So I see us as pushing lower here. I think we have some pretty significant downside to come in Amazon. There's really not much else you can do with that chart, guys. Really not much else. Netflix. We've been after this since this fourth wave at 333 area. We've been calling for a move to 236 to. Where'd it go? Where did it go, Motive Wave? What are you doing to me? Here we go. Ratio analysis for V2. That was our target. 253.89. Markets put in a 250, exactly 250 low. So Elliott Wave does work. For any skeptics watching this video who are keyboard cowboys getting ready to comment, Elliott Wave has its place, and it does serve a purpose. Okay. It absolutely serves a purpose. One other ones. And in fact, here's the update from last week where we were again highlighting this fifth wave down into this 253 area, and it played out relatively well. There is something I don't care for about this count, which had us introducing a potential alternate, but it's become quite evident that this is in fact the count. All right, what else? What else, guys? Apple bullish count invalidated. We've gone too low. Gone too low. So the bullish count was calling for us to still be in this minor degree 5 of intermediate 3. 4 has entered the territory of 1 and 2. Out the door. That brings in the only other count that's left. Okay, and that is that this wave 4 squares up to this wave 2. We've got fib support between 155 to 161.85. So there's a lot of stocks in here that look like they could be in for some significant downside action to come. I mean, we're already down 175. We closed just barely off the lows, so we're just a stone's throw away from this fourth wave support. when that fourth wave support comes in, I'm definitely going to be a buyer. I'm going to be adding to my position in my long-term portfolio. Adobe. Let's see, I think I'm on the purple. So this is just kind of a rough count. Adobe's kind of a tricky chart to count because it really has just gone parabolic, even on a log scale, not even a... So up in 1, ABC of 2, wave 2, a nice 61.8, then another 1, 2, this 4 squares up to this 2, gave us a nice equality of 4 and 2. Traditionally, I would look at this and see this as maybe an ABC of 4, but if we were to put blue parentheses 4 here, we wouldn't get a properly decomposable fifth wave move. Now we're in this fourth wave here that's squaring up to this wave 2 here. Equality is 205.20, and our low was in fact 207. 207.02. Okay, so there's a lot of symmetry in the market, guys, and Elliott Wave can help you identify these levels and these patterns well in advance. Okay, well in advance. So this looks like ABC of W, triangle of X, down of Y. So Adobe does look like it could be in for a nice upside move. Okay. Overall primary degree, wave 3, V1, 161.8% relationship is 371.99. 5V1 relationship, which when you have an extended third wave, typically 5 is equal or demonstrates equality to 1 in time and magnitude. That puts you at 341.15. So if we can hold this level here, Adobe looks pretty solid for some upside potential. AMD, I still think AMD might be in a correction. See, this is my alternate count here. 5 waves up of 1, WX, YX, Z, multiple combination correction there. Very long wave 2. Then we're doing this another 1, 2 here. This very long corrective channel from 2000 to 2015, that gave us this wave 1 resistance, but on the way back down we held support at what was previously resistance. So resistance has now turned into support, and in fact you can see right here we had a little resistance, then we just exceeded it all the way up to that top of that trend channel. If we can base support here, I definitely see more upside ahead for NVIDIA, okay? Or AMD, correction. This is another one we had a lot of fun with from an Elliott Wave perspective. Coming out of this correction here in 2, we got up to about 13 bucks, and I forecasted a $21 near-term target. We actually took on, we didn't take on an options position, we put on an equities long here. I think we captured about 86% profit in our rolling portfolio for, gosh, I don't know, 2.5 months, 2 months of exposure. Not a bad trade. So you can kind of count this as a completed wave 2. I don't think wave 2 is complete. I really don't. I think, let's go 195 minute. I think we just had the first 5 waves of A, 3 of B. Now we're doing another 5 waves of C to get down and retest this previous support from the previous fourth, as well as the 61.8% 2v1 relationship. From a time standpoint, it also lines up in that we have further to go, okay? But I like it. I like it for the long haul. If we can hold these levels, if we can hold over this previous resistance zone, hold the 61.8, start an impulsive 5-wave move off the lows, then I absolutely think AMD, from a technical standpoint, has a pretty bright future. Fundamentally speaking, financially speaking, I think they're a good turnaround story, and I need to do some more work there, but I like what I see from a technical standpoint. PayPal is getting hammered. I think we're in a fourth wave correction. I think we've got one last push to go to complete C of 2. All right. Check this out, though, which is really interesting. Look at the correlation between how the S&P trades, which is here, this line here, and how PayPal's been trading. Remarkable correlation between the two of those. What else? What else should we take a look at here, guys? Johnson & Johnson. We've been after, we had a target of 148.51 before a correction. We got 148. Now we're pushing into this wave 2. Once wave 2 is done, I think we're setting up for a much more significant upside run in intermediate degree wave 3. So I like Johnson & Johnson from a long-term perspective to, you know, to get up here into the 160s. 160s, not out of the question at all. Coca-Cola, that's another one. Consumer staples we've been looking for. Beautiful third wave advance. Nice 161.8% relationship of 1. Now we're pulling back in fourth wave correction. That was another one we were after this week. Pepsi. It looks like we could be in some type of flat here for 2. Once 2 is complete, though, I think we're working on a longer term move to the upside. This is kind of a choppy count, but it's totally valid. Up in 1, down in 2, up in 3, down in 4. Here's a great example of where you can't always find properly decomposed internals, subwaves, but it becomes quite clear what your larger degree count is. Okay, here's the quality of 4 and 2. That came in at 99, and we pushed to 96 before we started this impulsive uptrend. This impulsive uptrend has lasted a little while. 1, 2, 3, 4, and 5 to make up wave 1. Wave 2 gave us a nice 61.8, and I think we're doing another 1, 2, 1, 2. So I like Pepsi for a kind of longer term, more defensive hold. UHS doesn't look bad as well. I think we're in some type of a wave 2. This could also be a flat of this minor degree wave 2, but I think we're on the road to a nice uptrend and impulsive movement there. Procter & Gamble, this is one we were forecasting on the week for a wave 2 correction. Looking for support at 90.08 before we make a longer term move to 100 plus. Costco is either in this nice fourth wave triangle or it's in a fourth wave flat. The only problem with the flat idea is that we didn't get a 90% retracement of the A wave decline. So a part of a 3-3-5 corrective pattern, a requirement of a 3-3-5 corrective pattern is that the B wave must retrace at least 90% of the A wave decline. And we didn't have that. And Costco really likes triangles. It really likes fourth wave triangles. So I'm looking to put on potentially a butterfly with my subscribers to kind of hold us in this fourth wave zone prior to the fifth wave breakout. All right, guys, we've gone pretty long on this video. We've covered quite a bit. I think we'll leave it at that. And there's nothing else really pressing that I want to cover. Google, we can take a look at Google really quick. Where's my Google count? Pretty straightforward count here. Primary one, well, super cycle, 1, 2, cycle 1, 2. Now's where it gets a little tricky in that we're in, because you can see these clearly square up with one another extremely well. Now we're in this really long extended fifth. It's possible that it's complete. I don't necessarily think so. This fourth wave seems to square up really well with this second wave. Equality is 994.44 before we get the move higher. Okay. Quality of C and A is also right in this area. There is the potential that this wave 3 is complete, and that would look something like this. Okay, so fourth wave here, because this can be counted as an impulsive movement. All right, there is no 4v2 overlap. There is no 4v2 overlap. So that could have been all of 5, which completes 5 of the higher degree, 5 of the higher degree, and 3 of that. That would then square up this 4 with this 2. Let's just get rid of this. Visibility, less than a week. Makes it a little bit easier to see. And that would come in not till 893.7, equality of 4 and 2. Okay? There's our time extension. All right, guys, so we will leave it at that. One last stock I want to peek at. Facebook. Pretty easy count here. Well, I shouldn't say easy. We're in a primary degree fourth wave, which squares up to that wave 2. Equality, however, was at 152.45. 38.2% retracement's not down till 91. It's been pretty heavily beaten up. Not a very clear, a lot of overlap in this advance. So you have to really go out to a longer term time frame to get a sense of the higher degree count there. All right, guys, hope you've enjoyed the video. If you have any questions, comments, or concerns, feel free to leave a comment. I'll try to get back to them as I can. You can also visit our website at godeltrades.com, GODELTRADES.com. Scroll to the bottom of the page, click on the contact, and I'll be sure to get back to you as soon as possible. Thanks again for tuning in, and I will see you on the next one. Hope you have a good Thanksgiving. Cheers.